Hi, Lee Phillips here. Yeah, I'm a lawyer, but I'm going to talk about taxes. We're going to talk about the new Trump tax laws because there's a huge portion of that law that for some reason the media has never told you about. Now, we've just completed the update on the advanced tax tactics, which is a course that we've had for a long time, but we have now updated it for all of the new the tax Trump laws. Trump's tax laws, and all of that against me either. But the Tax Cuts and Jobs Act is a big deal for the middle class. And the media, the Democrats have said, oh, this is just for the rich. They've left a few crumbs for the middle class. Well, no, actually there's one. Here it is. It's 199A, and it is a big deal. Basically what it says is anybody who has a pass-through business gets to take 20% of their profit tax-free. Now, that's not the words that it says, but that's basically what it is. So let's look at it for 2 seconds. Pass-through business. What is a pass-through business? Basically, anything but a C corporation or a LLC taxed under Chapter C of the IRS code. So that's your sole proprietorship. You file a Schedule C, or it could be an LLC, which is a sole proprietorship. They call it a disregarded entity. And of course, an LLC could also be taxed as a partnership, or a partnership as a partnership. You could have a corporation or an LLC taxed under Subchapter S of the IRS code. These are all pass-through businesses. In fact, even people who have real estate generally qualify as a pass-through business because the Schedule E's will most often qualify under the new 199 tax laws. So what happens? Basically, it says that you're going to take all of your expenses and everything, your salaries, everything else, and then you have a profit left. And whatever that profit is, you get to deduct 20% of it off of your taxes. Tax-free. You just get a deduction for it. The bad news is the deduction is below the line, so it doesn't decrease your adjusted gross income, but it's below the line. Now, pretty much anybody who makes under $315,000 a year, small business, pass-through is what they call it, under $315,000 a year, you pretty much get your 20%. And I know a lot of accountants who don't even know about this. The advanced tax tactics, we go through it in detail. And it is relatively complicated because there are good businesses and bad businesses. You're going to like this one. Bad businesses are businesses that, quote, require the skill and knowledge of the owner in order to succeed. Well, duh. What business doesn't require the skill and knowledge of the owner to succeed? But what they're doing is specifically targeting the doctors, the lawyers. They finally stuck it to the lawyers. Everybody else, architects, those sorts of guys, anybody who is in this service industry type thing, where we're providing skilled services, basically what it is. But if they make above $315,000, it phases out up to $415,000, and then you're basically toast. Can't do anything about it. If you're in a good business, basically you're selling goods and not services based upon the individual. But if you're selling goods, you're in a good business. And you can take basically 20% of the profit forever. Now, there are qualifications after the phase-out period, starting at $315,000. But a lot of little businesses, you're not making over $315,000. So it's a gift. You get 20% tax-free, but you got to qualify and you've got to have your accountant take it and everything else. I assume the accountants are going to figure this out, but I talked to a bunch of them late in the year in 2018. They didn't know about it. And so you're going to have to make sure you get it. But you can get it if you're over. If you've got a lot of money, then there are 2 or 3 ways that you can qualify. You can figure out salaries, and you can get up to half of the salaries, 20%. If you have equipment, you can, anyway. If you're more than 315, it's going to be complicated. If you're under 315, 315,000, that's a lot of change. I like that. Then you get 20% tax-free of your profit. That's a pretty good deal. It is complicated. The advanced tax tactics goes through it. You may want to take more salary. We may want to lower your adjusted gross income, which the advanced tax tactics does. That's what we're trying to do, is lower your adjusted gross income. But if we can lower your AGI, we can get you down under the 315,000. So it becomes a question of what's your AGI. And so you might want to take more salary so that you drop below that, and well, that wouldn't help. But there are a lot of ways that we can help. So make sure you get your 20%. The new Trump tax law is pretty cool for the middle class when you get right down to it.